Beds, we're back for another episode of the Mortgage Show. How you doing, pal?
I'm doing good, buddy. How are you today?
Doing good, man. It's beautiful. It's Wednesday right now. Beautiful day in southern Maine. Spring's almost here. Snow's starting to melt. Got to feel pretty good about that.
What do you think about golf being upon us?
It's not going to be long. What do you think? Early April? Mid-April?
I remember a couple years back where I think it was like mid-March we played. Last year, I don't think golf got, I think it was like June we started playing, late May, right? Dude, last year
No
it
way.
was
Yeah, you might
got
be thinking late April.
last year it got cold February, early March, and I think it was, I don't know. Actually, you're right. I'm probably a month later than what it should be.
Yeah, it's not that far. I mean, there's obviously a lot of snow out there, but we'll be playing golf for too long. Unfortunately, it means packing the skis away for the season, but it is what it is, man. I'm looking forward to the spring and summer.
Dude, I'm sorry. I only joined you once.
I know you. Hey, it's all right. You got nervous, and it's okay.
I know. For those of you listening, Randy makes me super nervous. Like Randy puts on all his gear, he's got his routine down, he's got his condo. I'm like, man, how can I keep up with this guy? And then he just starts bombing down the hill. His stats are better than me. He looks better than me.
Hey, you got a really good new ski outfit this year, which I was really proud of you for. I was
Thank
bummed
you.
I only got a chance to see it one time, so I look forward to next year.
You know, I look forward to next year too. Let's count on twice next year.
I love it. I love it. How is mortgaging going for you?
I like my conversations. I like my meetings. Inventory is a little bit of an issue right now. The offers going out just
Mhm.
aren't accepted right now. So
Yep.
I'm in this little area that you don't like being in as a loan officer, but I think everything else is going well, so it's going to hit eventually. How about you?
Yeah, same. It's actually been a better than expected end of the winter, so I'm happy about that. Happy about the start of 2025. But it's the same challenges we've been talking about for a few years now. And we'll get into some mortgage news and all this stuff that we normally talk about. I have hope that the rest of the year is going to be a little bit better. So let's hope that better days are ahead. Do you want to dig into some of the stuff we want to talk about?
Yeah, where do you want to start?
Well, I think the conversation, or at least the conversations I tend to have over the past few years, is always around interest rates. And I think we have a reason to be optimistic about interest rates right now. I think I saw today that we were on a 5 month low, which is very nice. This is super general, but rates for a 30-year fixed, good credit, down payment, all that stuff is in the mid sixes, maybe a little bit above that, which is a far cry from where they were again 5 months ago. End of the year, we were up over the 7% mark. So I think that's good news. It's nice when we're operating in this market that rates are going down. But I wanted to dig into why that might be. If you want to get into a little of that information.
We're big when it comes to like economic news. Less than favorable economic news is actually good news for mortgage rates. We say that a lot. And within the last 5 months, we're noticing some of these reports are starting to stagnate. Um, I beat the drum of the jobs reports and the manufacturing. That's it's very strong still in my opinion, but it's not meeting expectation, which is normally a good sign for mortgage rates. You and I, prior to hopping on here, CPI has been nice. Like we're not worried about inflation anymore. Mortgage-backed securities, guys, hate inflation. Whenever we have inflation, interest rates are flying up. If you want to touch a little bit on that, Rand.
Yeah, let's go over some of the numbers real quick. February jobs report, and it's important to note, like you said, you still feel like the jobs reports are strong, but the good thing is that they are below expectations, and it really is key how the reports come back versus expectations. It's all about matching expectations. So the expectation for February job reports added or jobs added in February were 160,000, and it came back at 151,000, and they'll revise this later one way or another, but the initial reports were 151 versus that 160. So less jobs added than expected. That's a bad sign for the economy, good sign for mortgage rates. So that started the snowball rolling down the hill a few weeks back. Then we get to the CPI, which again is a measure of inflation year over year, past 12 months. I think, what was the expectation? 2.9 or 3%, but it came
Yeah,
back at
so
2.8%. So
Yeah, good job. Yeah.
Yeah. So inflation came back lower than expected, which over the past few months that hadn't been the case. It had continued to come in hot. And who knows what'll happen next month, but for now, we're in this area where we had the less than expected jobs report, lower than expected inflation rate, stock market's not doing well, there's fears of recession, all these things are creating, I don't know, a little bit of a perfect storm for rates to continue dropping, which would be fantastic.
I think something the next couple of months too, like some political stuff is sort of affecting government jobs right now. We're chopping in certain areas on the government level. And I noticed over the last couple of years within the jobs reports, there's certain indicators in there or sectors, if you will. And a lot of times the government jobs were really driving those jobs reports. So it's I think at this point, the next couple of months for the government stuff, as they trim a little bit more of that, I guess organically it should hit an area where these reports are actually not coming in close, although they're close
Mm-hmm.
right now. Sort of my off the cuff prediction is that maybe they're going to look a little bit worse than expectations in the next few months as government jobs are trimmed. And again, good for us. So we might be looking at a
It's
little
good for
mini
the market.
refi. Yeah.
It's good for the market. It's good for us. It's good for buyers. I mean, it's been 2.5, almost 3 years of higher than what we've seen in the past 20 years interest rates. So I think it's good all across the board if rates come down for everybody.
You know, 22 years in this, the first interest rate that I got was over 7%. I sold a few 7% in higher rates when I first started. And for forever, I never saw a 7% interest rate. In
Yeah.
the last few years, it's just been so common to see that number. It's going to be nice to get below it again pretty
Yeah.
regularly.
So let's talk about why this is good for people. We're on the cusp of what people in our industry call a refi boom, or maybe a mini refi boom, where we have an opportunity to do refinances for people that have purchased in the past 3 years at these high 6% interest rates, 7%. I mean, I think I had a few borrowers even did 8% if they had the right minimal down payment, low credit score scenario. So there's going to be an opportunity for people to refinance. So do you want to dig into what refinancing looks like, some expectations that we can set for people, and when it might make sense?
Yeah, I was thinking about this prior to hopping on. One of the things that I think would be beneficial for real estate agents is that the referrals that they've given to us the last couple of years, it could be a good talking point or a reason for them to actually connect with their clients to push them to refinance. I think those conversations are always a good thing. So I guess agents listening to this, it could be a good thing for you to just reach out to them and say, hey, interest rates are down. Might be a beneficial thing to reach out to your loan officer to talk about refi scenarios. A little value point for our agents, Ryan.
Yeah, no, I mean, absolutely. And it's important to know that we're not trying to refinance people that it doesn't make sense for them to refinance. So I think the value that we can offer is just having these conversations, pricing things out. And if the savings doesn't make sense for the cost of refinancing, then we can have that conversation and target another interest rate and continue to monitor that for them. So I think that it's a good conversation for realtors to have with their clients. And we're just happy to help one way or another if we get the deal now or later. That's what we do.
What sort of scenarios do you like when it comes to refinancing? Like, what's the value points that you where what do you default to when you're looking at an application for a refi client?
Well, there's a few different reasons people refi. So the first would be obviously to save interest rate to reduce on payment. So when I'm looking at one of those scenarios, we're looking at what the cost is to refinance versus what the savings is, when they might break even, how long they plan to stay in the home, what their goals are. So we look at all those numbers and see if we can save them some money on a monthly basis. Another scenario, which I have not done in a few years, but was a lot more prevalent in 2020 and 2021, is reducing the term of a mortgage. There was people that would maybe be okay with the payment they had, but if they could shave some years off of their loan, maybe they have 27 years left on a 30-year mortgage that they did, and rates improved, and they want to look at what a 20-year payment would be, and maybe keep their payment the same and shave off 7 years of mortgage payments. We could look to do that, although it hasn't happened again in a few years. Another big one is tapping into some equity. There's a million reasons why people would want to tap into their equity. How would you go about talking about those type of scenarios?
I like the area that you're in when you talk about term because for the longest time prior to 20 and 21, the interest rates were never really disproportionate enough to reduce term where it made sense. We
Yep.
actually might be hitting that again if interest rates come down a point or so. I like that benefit a lot. Actually, so many people in 20 and 21 reduced their terms, kept their same payment. I mean, I remember one where they chopped off 14 years and they were comfortable with the same payment.
Yeah.
And I had just done their purchase a couple years prior. It made me jealous that they had that scenario. We're not financial advisors, but really we are when it comes to
Mhm.
mortgages. And I think it's really nice that I think with our experience when we're looking at an application, you do have the term reduction. You do have some thoughts about debt consolidation,
Yeah.
creating monthly liquidity in people's budgets. So that means, and that's sort of the question Randy was asking is like, how do you tap into equity? You could get up to the property's 80% of the property's value.
Mhm.
A lot of times I look at what payment obligations people have on other things, credit cards, personal loans, car loans, student loans. And, with those interest rates in the high teens right now and those balances rising, I, I know that you're sitting on the shiny rate right now, or most people are. If you're between 2 and 4%, and you can consolidate a bunch of debt and help your monthly liquidity, and you're sitting in the high fives or sixes, depending on where rates go. I mean, I think that's going to be a very attractive scenario soon.
Yeah. No doubt about that. The other way to tap into equity is through second mortgages. So whether
Yep.
that's a home equity loan or a home equity line of credit, those are questions that we get asked all the time. Closed on a couple home equity loans in the past couple weeks for people that are looking to do some renovations. So rates aren't at the point that it made sense for them to do a full blown cash out refinance, kind of like what you were describing for their projects, but they keep their low, shiny old interest rate, I guess, at this point in place. And then when they do a second mortgage on top of that to tap into, people I did loans for, anywhere from $50,000 to a few $100,000 to do whatever types of deck repairs, kitchen repairs, things like that. So we can continue to do those, and that's something that we're happy to look at for people as well.
I love it, man. As we're chatting back and forth, it reiterates to me that we actually look at a scenario, we consider what makes sense between all of these interest rate scenarios, these products. And I think our goal is always to give the best case scenario to our clients. So,
Last thing I'll mention about when it makes sense to refinance has nothing to do with interest rate, has nothing to do with tapping into equity, and it's for those people that are getting a divorce.
yeah,
That's one of those scenarios that's kind of immune to the interest rate stuff. And I feel like we've talked about it on a podcast before. So for anyone that's listened to all of them, apologize to rehash. But for any new listeners, it's important to know that when you have a couple that is going through a divorce, both people are on the mortgage and the note, and you have to remove one of those people. The only way to do that is to get a new mortgage in one person's name, replacing the old mortgage in both people's names. There's no mechanism for just calling your lender and saying, hey, I'm going through divorce. Can you remove me from the mortgage? They will not do that because they made the decision to lend to both of you at the time. Again, the only way to do that is with a new mortgage in the one person that's remaining in the house's name, assuming they qualify, and replacing the other one with two. So if you know anyone that's going through that unfortunate situation, we've done a bunch of those over the years, and that's one of those things that we'll continue to do regardless of how interest rates are.
man, you're feeling it right now.
I am feeling it right now.
You're like downhill Randy. You're like Travis Henry right now, just
Just
running
letting it
over
rip, dude.
dudes. Um,
A Travis Henry shout out on our podcast. I did not
yes,
see that coming today.
yep, there it is.
Thanks for that.
Um, you're welcome. One thing about the refinance is that a lot of times during a divorce scenario, you have to sort of cash out and give equity to the vacating ex-spouse or soon-to-be ex-spouse. It is actually not a cash out refinance in a
Mhm.
divorce situation. Cash out refinances have sort of a worser case scenario as far as rates concerned.
Mhm.
Divorce situation, it's actually treated like a rate and term interest rate, which is slightly better.
Yep, that's
There's,
worth
there's
mentioning.
yeah,
People don't realize that from an investor, Fannie Mae, Freddie Mac point of view, it's more of a risky transaction for a borrower to take cash out of their home. Like there's a higher default for people that do that sort of thing than ones that are just doing a refinance to pay off just the existing mortgage at a lower rate or lower term. So there is a higher rate for cash out refis versus like what we call rate and term. So good mention there. Gonna move on to some other stuff, okay, Beds?
let's do it.
This is just a one-off thing, but it's worth mentioning since we're talking about interest rates for our realtors, buyers that are following Maine State Housing's programs. Maine State Housing offers lower interest rates than what the market dictates on other types of loans. When rates dropped in the fall, Maine State Housing dropped their rates to 5.375%, which was phenomenal. Anyone that's been able to get that is a great deal. And there's even lower rates for certain segments that break down further. But Maine State Housing upped their rate back to 5.95, which is still a fantastic rate, but it's worth shouting out.
It's interesting too because they had to adjust prior to this little run of interest rates going down, so they had to adjust their rates up, and now here we are with a lowering interest rate environment. My
I
guess is
know.
that this is going to go back down again.
Would love that. But 5.95 is not a bad rate at all. So if you're still kicking around Maine State Housing, the rates have gone up a little bit. And unlike other types of loans where rates change on a day-to-day basis based on the market, Maine State Housing is very much a they set the rate. All lenders offer it. It's the exact same thing from place to place to place. So right now it's 5.95 for first-time home buyers, and you can get even lower if you're a veteran or first-generation buyer. So talk to us about that. We're happy to explain all those differences.
Dude, Maine State Housing is just an excellent option.
Yeah, man. If you make under the income limits and all the other terms work out, it's a no-brainer. And if sellers would accept them more versus the cash offers that they receive or buyers using conventional financing, it's a fantastic option.
Yep.
You want to talk about inventory for a second? I don't want to spend too much time on it, but what are you seeing with inventory with your referral partners or realtors that you talk to? Are you seeing anything different over the past few years?
Man, Biddeford Saco is like barren right now. It's interesting.
Yeah.
Like I think Biddeford had a listing. I think that was like 460. That really should have been an under 400 listing, but I understand why that's priced the way it is when there's no competition. Everything over 550 seems to be sitting just a little bit more. But man, again, we're back in this area of like, feels like zero inventory. It's
Yeah.
annoying.
Yeah. I agree. I will say that I've noticed a few places sitting on the market a little bit longer. Some of the few listings that are out there, I've seen some listings make it through 2 weekends of open houses with not as much activity. So for as little inventory there is some inventory that I think the sellers are shooting maybe for the moon with the
Yep.
prices that they're going for, to the point that people are like, actually, no thanks. I'm just going to let that sit. And in those opportunities, buyers might be able to get an offer. It's hard to go into a property that just got listed one day and make a lowball offer, because sellers obviously listed at that price for a reason. They want to see if they can get it. They're going to give it a weekend. They're going to give it a few days. But if that house is still on the market after 2 weekends of open houses or 3 weekends of open houses, that's probably a good opportunity for you to come in at something a little bit lower.
It feels abnormal compared to what the last couple of years have been, but we're actually, I think it's a more normal market now.
Yeah.
We're heading to a more normal market. Pricing is going to have to clean itself up a little bit.
Yeah.
Yeah.
Yeah. So we'll continue to monitor that. Couple deals that I wanted to mention on my end of things. I don't know if you want me to just fire away if you have anything you want to share deal wise, but I think there's a couple things that I've dealt with recently that's worth sharing with people.
I'll piggyback you. Go ahead, bat lead
Yeah.
off.
So it's a very unique situation. I don't know if you've ever heard of this type of property, but I have a duplex condotel down
Yeah.
in Will. So very rare. Condotel is basically a condo that you can't stay there full time. I think the owners are only able to occupy the properties typically for like 28 days out of a month. They typically have a lobby area that handles some type of reservations, and oftentimes they're rented anyway. So it's very challenging to finance these type of properties. We usually look to local banks, but I had one that's a duplex, which is even stranger because a lot of people position a condotel as a second home, but a duplex that's a second home is kind of an investment property by default because you can't occupy both parts of a duplex. In this case, I have a borrower who wants to buy it with their parents. So, anyways, just we had to do a lot of legwork on this. Saco and Biddeford Savings is actually going to be able to finance it. So that property is currently under contract. We're going through the loan application process, and it's just a very strange
Yeah.
property, in my opinion, that we
Yeah.
were able to find a solution for at Saco and Biddeford Savings. Again, we are facilitating this loan. We're brokering it to them. It's not like I'm saying go there specifically. I'm saying come to us and we can find an outlet and place it in the right spot,
So we're using their money in short.
which is what
I
we do for all the lenders. I mean, we have
yeah.
CMG money that we lend, but we also have countless broker relationships, including Saco and Biddeford Savings. So it's up to us to find the one that makes the most sense for the people we're working with.
Yep. Okay, I have one, and I don't know if you've heard this yet. I have a client that was referred to me. She's not under contract yet, but I got a pre-qual done. Dude, she's like Dexter. Okay.
A serial killer?
Dude, she she analyzes crime scenes where she's employed decided through their arrangement, they decided best case scenario for her to be able to write some stuff off is let's go 1099. Okay. So she's been in that position for 5 years. She goes 1099 in October of last year. And here we are a couple months later. So she's got a job letter, like standard job letters are. Um, there has been a consistency of deposits in her bank account since she switched over to 1099. Here's the catch with this, guys. When you're 1099, typically you have to have 2 years history of being 1099. I took this and I farmed it out our broker relationship now, similar to what Randy just said with Saco Bid. But I brokered this out or farmed it out to our non QM lenders. And we have a couple of non QM lenders that will actually take this loan, Randy.
Mm-hmm.
I had to show the history of deposits, I had to show the job letter, and I just used the regular income like I typically would. 20% down, good FICO score,
Yeah,
full
that's
disclosure.
always the thing. Whenever you go to some of those more unique lenders, if this isn't a first-time home buyer with 3% down and challenging credits, like you have to actually be a solid buyer on the credit and down payment front. But do you mind me asking who the non-QM lender was?
Oh,
Angel Oak,
it's the other one other than Angel Oak that we get peppered. Home
Home
Express.
Home Express.
Yep.
I do love my boy Chris Colgan over there. He's been very helpful for me too. And we closed the bank statement loan there not that long ago too. So nice job.
Yeah, thank you.
Other situation for me, this was actually kind of ended a little bit heartbreaking in a heartbreaking way, but I had a borrower that was buying a ski condo up in Bridgeton and solid borrowers, huge down payment, great credit, great income. And it just goes to show that sometimes when you buy a condo, it's more than just how strong the borrower is, it's how strong the condo is.
Yeah.
Most people don't realize that, if you're buying a single family home, yes, you do an appraisal on the property, make sure that everything's fine, but you're really underwriting the borrower and their ability to pay. When you're doing a condo, not only are you doing the borrower, but you're doing the condo association. So there could be things going on in the condo association unrelated to the borrower or even unrelated to that specific unit that would prevent them from moving forward. Things like people being late in on their condo dues, or one person owning too many of them, or just pending special assessments or litigation, all this stuff. So anyways, we have these borrowers like slam dunk loan. Come to find out, all the decks are condemned on the whole building, the whole building, and they don't have a time frame for when they're going to be repaired. They don't even know how much it's going to cost. And the management company answered the condo questionnaire, which indicates all this stuff a certain way that just revealed it all. And we couldn't ask them to do it anything other than the way is truthful. So that's what they did. Kill the deal from a conventional point of view. No lender, or most lenders, don't want to lend on a place where all of the decks in the whole building are condemned. It's a safety issue. It's just like they have no interest in lending on that type of project. But we have a product called Alt A. You may have heard of it. Probably haven't executed on it yet. Got the appraisal done, and there was no mention of the decks being condemned. Like, this is something that's going on with the building, but you don't need a condo questionnaire to move forward with that type of loan. You just need an appraisal. I had an as-is appraisal, which means it wasn't subject to repair of the decks or anything like that. We could have moved forward with this. And we did a bunch of legwork on this. And the thing that's tough about this type of loan is where instead of being at a rate around 7, would have been lower now for these borrowers on a conventional loan, it would have been 9, So they ended up not moving forward because it was a big loan amount and they just didn't love the payment after that. But I say that to illustrate the fact that deals don't always go the way that we want, but we do have solutions typically to make things happen one way or another. And we could have made this one happen. The numbers didn't make sense for them at that point.
Do you feel like the message here is buyers that are real estate agents that are working with buyers that are trying to purchase a condo? I don't always, maybe I'm never aware of the due diligence that they do on the condo associations prior to writing an offer for a buyer, but I think the message that I have is just dig a little bit. Is there any litigation on the property? Is there anything, I guess the physical condition you guys would know up front because that's a big one for agents to know, but just make sure that association is sound. Litigation, employee dishonesty, insurance is another one. Just random little things like that, just to kind of qualify it on your own to make sure that it makes sense for the buyers to actually write that offer.
Yeah. And I don't know that there is a lot of legwork, and that's not anyone's fault. I think a lot of people are just making offers and hoping for the best.
Yeah.
And let us pull the rabbit out of the hat kind of scenario. If something's wrong, they'll figure out the solution. But I mean, a little bit more legwork or information up front is always helpful. So, anyways, basically, CMG can make some weird stuff happen. We do a good job with all the normal stuff, but we can make weird stuff happen too if you need us.
I think one that I want to mention, it's between purchase and refi. You said it. You said bank statements. I have one closing this Friday. Shiny old rate, low. I think it was like high 2% rate. Wanted to tap into some equity, ready for garage, ready for in-law apartment. Just didn't want to vacate that awesome rate. So review the tax returns, 2-year average, self-employed, writes off everything. The net income was clearly way less than the gross income coming in. So I used a 12-month bank statement loan, and we're going to do a second fixed mortgage on the property so he can turn around and put a in-law in the garage.
A
So
second one, a second mortgage. Wow,
yeah, second mortgage. Yep. So
that's fantastic.
we have a second mortgage bank statement scenario up to 80% of the house's value, 620 or higher mid credit score. Interest rate, in my opinion, is mid, if you will. And to describe mid, it's prime plus an index. So the higher you are to the highest FICO score, your index is, for as an example, this one was a high eights interest rate. It's a second mortgage. It has risk. It's not going to be the low interest rate that a first mortgage would be. But I mean, if this person was at a 620, that interest rate was going to be 11 and a half. So not best case, not worst case, but we were able to get money.
Yeah, and then at some point, if it makes sense to refinance it all when the garage is done, it's another mortgage that can lower that interest rate.
So
Love that. Anything else mortgage related? Because I'm going to pivot to one last thing before we wrap it up.
that's it.
So we talked a little bit about this before we started recording, but me and you are connected to a lot of different people, and on the periphery of our little mortgage world that I think it's worth shouting out real quick. And if there's any not mortgage people, realtors listening, even any home buyers listening, we have connections to a lot of people doing a lot of different services that you could benefit from in your home or in your business. And I just want to shout a couple of them out if you're okay with that, Beds, and maybe you can mention some people that you network with and do some business with.
Yeah, let's do it.
Okay, I'll go first. So just going to do a couple of them. But I have a friend, his name's Andy Knox with All Dry Services of Southern Maine. He's a water mold mitigation specialist, and inevitably people have water issues and they're not sure where to turn to. If you're a realtor, home buyer that has those sort of things, let me connect you with Andy. They've done some work for me personally. They show up within 2 hours. They stop the water from coming out. They dry things off. They'll help you figure out if you got a demo or not demo, and then set you up with someone that can rebuild it. So they can make a situation where you're panicked and you're not sure what to do a lot better, and help you kind of get things going with the rebuild. So I want to mention that.
Continue though while you're doing it, because you're mentioning Andy. I'm sure there's
Yeah.
so many more names that you can mention. Kind of go around in your mind as you're sitting in that room, like, give me industries that you could refer so people know that you could be a source for that.
Yeah, I'll just give a couple more, but I always mess up his name. But Luke Buot. I think it's like,
Is it Bot? Luke Bot?
It's Boot. Yeah, yeah. I always meant Buotte, but Luke is the freaking man. Maine dump runners. So everyone's heard of the dump guy, and honestly, the dump guy is great. I've used them personally, but Luke works out of Lorchard, Saco, Biddeford. He'll go bigger than that, but he is someone that'll come and pick up any junk that you have. He'll do a whole house cleanup. He'll do junk in the backyard. He'll empty out a garage, a basement, the stuff no one wants to pick up. Just him and his guys will lug it out of your house, get rid of it. If there's things that they can recycle, they will recycle it and take care of everything for you. So in this business, especially realtors, you have these houses that you want to sell. You have some sellers that have a bunch of junk, not sure how to get rid of it. Luke at Maine Dump Runners would be an awesome contact for you, which I'm happy to make a connection to. Do you want me to fire away another one?
Yeah, keep hammering.
I don't know if you have another one too, but so I have Charles Shattuck Heerdorn, who is the owner of Tailored Closet in Portland. So my wife and I, we have a walk-in closet, average walk-in closet. We bought our house, just like the wire racking stuff when we bought it. Nothing special. I mean, got the job done. We hired Charles to come in and design like a new cabinet scenario, the whole closet, whatever. It's super functional. It was affordable for what it was, and he did an awesome job. So for people that are looking to turn closet space, kitchen space, guest bedrooms, they do all kinds of storage related things, do a really nice job too. So whether you're a realtor or a homeowner, that are looking for that some type of organization, but like maybe on a little bit higher end type scale, he'd be a great connection as well.
A couple that I have, Katie Salucci, Manja Kitchen. It's been great getting to know her. She'll come into your house, she'll do a party, she'll do a certain number of people for catering scenarios. Really great personality, seems like she dominates. Ease Manual Therapy is another one. If you drive into Pepperell Square, she's up on the top left. Man, she's amazing. I see her once a month. There is nothing more comfortable than dealing with a good masseuse. I just
The best.
it's like best case scenario. So she's amazing. The industries, we seem to have a few people that overlap, and I'm still trying to learn some of their places and what I could refer, but elderly care.
Mhm.
I have probably 3 or 4 people from the services of driving people around that need help, heading into hospice, sort of longer term care scenarios. So like those type of referrals, I feel like I have a good network to refer. And then you got insurance, and I've got this great. I actually, you know what? We could go all day. I see the
Yeah.
room. I see your pictures from your social media. There's so many people in there. I actually just think the thing that you could do is reach out to us and just ask us because we
Yeah.
probably have somebody.
Definitely. Yeah. And I thought it was just a good idea to share some of those people's names. We refer to each other, they refer to us, we refer to them. I think in business, it's important to have a solid network and people that you trust and people you can refer if you need them. So that's just a handful of mine. I actually have others that I want to mention, but maybe we can do a few each month.
Yep.
So we can give them shout outs. And if the timing's right for anyone listening, we can make a connection. But definitely reach out if you need a connection to anything. We probably have one. Bids.
Yeah.
You want to wrap it up?
I do want to wrap it up. I'm gonna end in a personal area. I hope this is not weird. I have put my beautiful black lab in most of my marketing stuff. She has been an amazing animal for my family. We're coming to the end of our road, Randy.
Oh, I'm sorry to hear
Um,
that, man.
Thanks, man. And I've got. I'm not going to get emotional here. It's going to be very emotional when it happens. It's happening soon. We've got this very awesome thing set up for her last day, and I just can't say enough of how amazing 13 years was. And it was always fun putting her in my marketing videos. So it was a beautiful run for Luce.
Shout out to Luce. I saw you guys did a photo shoot for her a few weeks back. Might have even been
Yeah,
months at this point. I
yeah,
thought that was a cool thing that you did for her. So I'm glad you're able to enjoy it. We've gone through the process of putting a dog down, and it's the worst thing ever.
yeah.
Dogs are so incredible, great part of your family. It's tough, but I'm glad you're able to enjoy those few days together. And I will say, me and you used to be neighbors,
Yep.
and I remember when you got Lucy all those years ago. I can't believe it's been 13 years, dude. It's just time freaking flies. But
It's insane, man. It's like as you kind of get to the end of the road, you start thinking about all of the things or all of the people that were in her life, and
mhm,
you just sit back and you're like, wow, 13 years. And I will say what's sort of causing this is a cancer and it's in her foot, and I'm in a position to amputate, and I'm not going to do that for her. It
yeah,
would be miserable at her
at
age.
13 years old, I mean, it's
Yeah.
just I don't know.
So for those of you that have been watching, I always put her in a disc golf video. Next Friday, she's going to play one more hole with me before we have to say goodbye. I don't know
Love it,
how I'm going to pull it off, but I'm going to pull it off.
love it. Keep me
Yep,
posted, dude.
I will.
I think that's a good place to end it, man. Solid episode. Hopefully, people listening got a lot out of that. I try to share as many nuggets we can in the industry, and please share it if you don't mind. If you haven't subscribed or followed on YouTube, Spotify, or Apple, it'd be cool if you did that for us. We appreciate it. Thanks for the support.
Yeah, thanks for the support.
So, all right, guys, have a good week.
See you.